It'll be the biggest recession on the planet. But he needs to swipe that credit card one more time. Inflation. Who wants to talk about money and how much they don't have any? I do. Inflation fell for the 8th straight month in February. Now, before I even read this article, it's coming from CNN. Just listen to the title. Inflation fell for the 8th straight month in February. So if I think they measure inflation on an annual basis, but it'll break it up in months. It's like they kind of extrapolate for the year. When they say inflation fell, inflation generally is bad. Whether it falls from a higher number to a lower number is irrelevant. It still means the prices go up. Let me say that again. Even if inflation fell or it falls, because inflation is a compounding metric, meaning if it was 10% last month and it falls to 5% this month, all it means is the additional 10% that is on whatever dollar figure you're calculating, instead of it continuing to compound at 10%, it's only going to compound half of that, 5%, for argument's sake. Let me see if I could illustrate this in Sheets, Google Sheets. Google Sheets. This is before even reading the article. We need to get this one out the way. Try Sheets. Go to Sheets. All right, so here we go. Okay, let's pick a dollar value. Let's what? $100. Damn, $100. Jeez, there we go. Now I'm about to ramble. Let me just fast forward through this a little bit. Basically, what I'm doing is setting up an Excel sheet so I could better explain the whole inflation to you. In the meantime, you could hit the subscribe button and the like button. Back to the video. And 4%. So, this is the statement. This is how you can fool people with numbers. In February compared to January, inflation fell to half the figure. Whatever you're purchasing used to cost $1,100 in January with an inflation rate of 10%. Even though inflation was reduced, the dollar value for your purchasing power still goes up. Not your purchasing power, the price of whatever you're purchasing still goes up. And even in March, inflation dropped some more. But still, your purchase price is still going up. And this is how they play tricks on you when they're telling you about stuff. So they'll say inflation is at a record low. There should be no inflation. There should be no price increase. But that's how they do it. So this is kind of long-winded, but you get the point. Now let's go back to the article. Okay, inflation fell for the 8th straight month in February. Like I said, it still means the price of stuff went up. Okay, let's read. What does this video say? It says Fed chair predicts higher than expected rate hike. Analysts now predict half-point increase at meeting last month. Blah blah blah. Let's hear what they got to say. They're probably gonna bombard me with an ad or something.
Custom Ink helps us celebrate and drive our students' achievements.
US markets took a dive after a warning on interest rates from the head of the Federal Reserve. Jerome Powell says the economy is strong and that likely means higher than expected rate hikes. The Dow closed down 575 points Tuesday. Powell says there are signs US inflation is easing somewhat, but the core services sector remains stubbornly high. Analysts are expecting a half-point rate increase at this month's Fed meeting. Powell also had this warning for lawmakers.
Congress really needs to raise the debt ceiling. That's the only way out, in a timely way that allows us to pay all of our bills when and as due. And if we fail to do so, I think that the consequences are hard to estimate, but they could be extraordinarily adverse, and could do long-standing harm.
More now on Powell's testimony and the coming.
Well, listen, it's not hard to estimate. We're talking a total collapse of the U.S. economic system, and the ripple effects will be felt worldwide. It'll be the biggest recession on the planet. But he needs to swipe that credit card one more time for us.
Interest rate hikes from CNN's Matt Egan.
Jerome Powell is essentially saying that this war on inflation could drag on, perhaps into the summer. Here's why. Despite the Fed's best efforts to cool things off, the economy got off to a very hot start this year. Hiring boomed in January. Retail sales skyrocketed. And here's the big problem. Inflation remains way too high. If you look at the Fed's preferred inflation metric, it shows that, yes, price gains have cooled off over the past 9 months, but they heated up in January. And inflation remains well above the 2% level that the Fed is targeting. Listen to what Jerome Powell said about what all of that means for interest rates.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
In other words, more tough medicine from the Fed is probably on the way.
All right, let me explain why he's in this predicament. So the problem is inflation is a compounding effect. And because it's compounding, kind of like interest on whatever investments you have, it runs on an exponential curve. Now, what is happening is they printed so much money, the US economy jumped ahead on that exponential curve. And if you know anything about exponential curves, it starts off like barely scratching the surface like this. It almost looks like a straight line, and it starts to tilt up, and then it gets to a point where it just rockets straight up. And that's the nature of exponentials. If you're counting in powers of 2. So for example, 2, 4, 8, like that doubling effect. 2, 4, 8, 16, 32, 64, 128, 256, 512, 1024, 2056. That is, if you plot that on a graph, it will run up like an exponential curve. And that's what the Fed is trying to control. Their metric is 2%. It's not really 2% if you look at the evidence of inflation over the years. But let's watch this video.
Fed has already raised interest rates 8 straight meetings. It lowered the dosage of that inflation fighting medicine in the last 2 meetings. But after this hearing, investors have begun pricing in a growing chance that the Fed has to go big again with a 50 basis point rate hike later this month. And that did not sit well with Wall Street. Markets were very little changed before Powell started speaking, but by the end of the day, they closed down big. Now, for Main Street, all of this, of course, means higher borrowing costs. Mortgage rates, they're already creeping closer to 7% again. Credit card rates have never been higher than they are right now. The problem is that the more the Fed has to do to tame inflation, the greater the risk that they do too much, and they accidentally slow the economy right into a recession. Back to you.
Well, I'm not gonna continue with this video. I actually think they're trying to cause a recession, and the reason why they're trying to do it, because they're pretty much out of options. If the inflation gets out of hand and prices run on that exponential curve, the discontent that will happen within the country can topple governments, and then there is no Fed. So one of the ways they could combat it is to make the people who have the investable assets, make them lose a lot of money, slow the economy down, cause a recession, but the banks will survive it, reset the system, and start from scratch again. It is not anything new. They've done this before, and they could do it again.